Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Breaking: OpenAI CEO Sam Altman confirms GPT-5 launch is just months away. What innovations await? Galaxy and Ripple CEOs fund MoonPay with $160 million for Trump token amid controversy. Coinbase eyes India market reentry as FIU softens stance on offshore exchanges. Gould's crypto background sparks optimism for fintech-friendly policies at the OCC. Bitcoin price could surge to $1.5 million by 2030, ARK invests Cathie would predicts, thanks to institutional demand. Breaking: OpenAI CEO Sam Altman confirms GPT-5 launch is just months away. What innovations await? OpenAI's latest AI model, GPT-5, is set to launch within months, integrating its O-series and GPT-series models into a unified system, according to CEO Sam Altman. New roadmap and key milestones. In a roadmap update posted on X on February 12, Altman detailed OpenAI's plan to first release GPT 4.5, codenamed Orion, marking their final non-chain of thought model. Following GPT 4.5, our priority is to unify the O-series and GPT series into a single, versatile system, Altman stated. The GPT-5 model will integrate the capabilities of O3, OpenAI's reasoning model launched with O3 Mini on January 31, which focuses on math, coding, and scientific analysis. Timeline and access to GPT-5. GPT 4.5, Orion expected in weeks. GPT-5, rolling out within months, Altman confirmed that free users will gain access to GPT-5, though premium users will enjoy higher performance without usage limits. AI industry competition heats up. The announcement comes as competition in AI intensifies. DeepSeek launched, challenging ChatGPT and shaking US stock and crypto markets. Microsoft and OpenAI are investigating possible unauthorized use of ChatGPT API data by DeepSeek. Google DeepMind unveiled Gemini 2.0, aiming to power future AI agents. Salesforce CEO Mark Benioff predicts that autonomous agents, not language models, will dominate AI's future. NVIDIA CEO Jensen Huang has doubled down on building agentic AI systems. Final thought: is GPT-5 poised to redefine AI applications across industries? Galaxy and Ripple CEOs fund MoonPay with $160 million for Trump token amid controversy. Massive demand for Trump-themed memecoin leads to unprecedented liquidity needs. The launch of the Trump memecoin sparked a frenzy in the crypto market, reaching a peak of approximately $79 within a day of going live. However, the overwhelming demand caused widespread network congestion across multiple blockchain platforms. In response to this unexpected surge, MoonPay received a $160 million liquidity boost from Galaxy Digital's CEO, Mike Novogratz, and Ripple's CEO, Brad Garlinghouse, to ensure smooth transactions. MoonPay faces liquidity crunch amid surging demand. Keith Grossman, president of enterprise at MoonPay, disclosed that the fiat-to-crypto platform faced an unprecedented surge in registrations during the Trump and Melania memecoin launches, leading to a near-liquidity crisis. In an interview on the When Shift Happens podcast, Grossman explained that 750,000 new users signed up during the memecoin's debut weekend, effectively overwhelming MoonPay's infrastructure. The demand was so intense that it mirrored a distributed denial of service (DDoS) attack, he said. Grossman detailed how MoonPay's liquidity reserves were temporarily inaccessible due to traditional finance restrictions, as most of the company's assets were held in BlackRock accounts, making it impossible to meet user demand immediately. The volumes were just gigantic. All of the liquidity that we used to buy and sell crypto was locked in BlackRock accounts, and it was a holiday weekend during the inauguration. So, we had no access to our capital. Our reserves were dwindling really fast, Grossman said. Recognizing the crisis, Mike Novogratz stepped in with a $100 million loan, while Brad Garlinghouse provided an additional $60 million to MoonPay. The company later repaid the funds on January 21 once it regained access to its BlackRock accounts. Trump memecoin reaches $9 billion market cap amid political backlash. The Trump memecoin skyrocketed in popularity, achieving a market capitalization of nearly $9 billion within 24 hours of its launch. At its peak, the token's fully diluted value exceeded $70 billion, making it one of the most successful political-themed digital assets in history. However, its explosive rise triggered significant controversy, with legal experts and politicians debating the ethical and constitutional implications of the token's existence. Legal experts debate the constitutionality of Trump's memecoin. While some legal analysts viewed the launch of the Trump memecoin as a step toward increased regulatory clarity in Washington, others saw potential legal violations. Attorney David Lesperance argued that the token offering could violate the Emoluments Clause of the U.S. Constitution, which prohibits government officials, including the President of the United States, from receiving gifts or financial benefits from foreign entities. The release of a memecoin by a sitting U.S. president is a clear violation of the Emoluments Clause, which is designed to prevent undue foreign influence over the executive branch, Lesperance told Cointelegraph. Senator Warren calls for a federal investigation. Amid mounting scrutiny, Senator Elizabeth Warren called for an official investigation into the Trump token, citing concerns over bribery risks and financial misconduct. In a January 22 letter, Warren highlighted that Trump-controlled entities, including the Trump Organization, hold 80% of the Trump token supply, raising serious ethical concerns. Consumer advocacy group Public Citizen also pushed for a deeper probe, releasing a February 5 statement reiterating that the U.S. president is explicitly barred from accepting financial gifts under U.S. law. Will political memecoins reshape the future of crypto regulations? As the Trump memecoin saga unfolds, the crypto community and regulators alike are closely watching its impact on digital asset regulations. With growing concerns over financial transparency, political ethics, and potential legal violations, will this memecoin controversy lead to stricter crypto regulations in the United States? Coinbase eyes India market reentry as FIU softens stance on offshore exchanges. U.S. crypto exchange plans come back after 2023 exit, engages with Indian regulators. Coinbase, the U.S.-based cryptocurrency exchange, is reportedly in active discussions with Indian regulators to facilitate its return to the Indian market, marking a potential comeback after its 2023 exit. This development follows a regulatory shift by the Financial Intelligence Unit, FIU, of India, which has begun easing restrictions on foreign crypto exchanges. Coinbase reignites talks with FIU for India reentry. According to a report from TechCrunch on February 13, Coinbase has initiated conversations with the Financial Intelligence Unit, FIU, signaling the exchange's intentions to resume operations in India. In a statement, Coinbase expressed optimism about the Indian market, emphasizing its commitment to complying with all local regulations. Coinbase is excited by the opportunities in the Indian market and intends to comply with applicable regulatory requirements, the company reportedly stated. The exchange's reentry efforts coincide with the appointment of Paul Gurrawal, Coinbase Chief Legal Officer, CLO, to the board of directors at the U.S.-India Business Council, USIBC, which aims to strengthen U.S.-India commercial ties and support cross-border fintech collaboration. Coinbase 2023 exit, a troubled chapter in India. Coinbase return would come more than a year after the exchange ceased operations in India in September 2023, instructing users to withdraw their funds by September 11, 2023. The shutdown affected all Coinbase retail services in India. This move was not the first setback for Coinbase in the country. Earlier, in April 2022, the exchange abruptly halted its United Payments Interface (UPI) services, just 3 days after its India launch. The suspension was prompted by the National Payments Corporation of India, NPCI, which refused to recognize any crypto platforms using the Reserve Bank of India's (RBI) payment rails. Despite regulatory hurdles, Coinbase Ventures, the company's investment arm, had made significant inroads into the Indian crypto ecosystem, including investments in leading local exchanges like CoinSwitch Kuber and CoinDCX. Coinbase CLO joins USIBC to strengthen US-India fintech collaboration. In a parallel development, Paul Gurrawal, Coinbase Chief Legal Officer, was appointed to the US-India Business Council, USIBC, Board of Directors on February 12, signaling a broader effort to rebuild ties between the US and Indian digital asset sectors. Welcoming Gurrawal, USIBC President Atul Keshav praised his leadership, emphasizing his expertise in fintech and digital assets. Paul Gurrawal's leadership in the fintech and digital asset space will be crucial as USIBC explores new frontiers of financial innovation between the US and India, said Keshav. Gurrawal, in turn, highlighted India's rapid growth in Web3 and blockchain technologies, stating, "India has one of the largest and fastest-growing Web3 ecosystems in the world, with a booming developer community and pioneering startups." Since 2018, India's share of global Web3 developers has quadrupled to 12%, marking the highest growth among emerging markets. India's changing crypto landscape, FIU softened stance on offshore exchanges. The renewed optimism for Coinbase India return stems from a noticeable shift in India's crypto regulatory environment. Despite imposing strict curbs on offshore crypto exchanges in late 2023, the Financial Intelligence Unit, FIU, has since softened its stance, evidenced by the registration of major platforms like KuCoin and Binance in May 2024, after they paid regulatory penalties. Additionally, in September 2024, local reports suggested that the FIU was reviewing applications from 2 more offshore exchanges, signaling a broader shift toward regulated foreign crypto participation. India leads global crypto adoption despite regulatory hurdles. Notably, India emerged as the world's leader in crypto adoption in 2024, fueled by a surge in Web3 innovations, despite previous regulatory crackdowns. With India's burgeoning blockchain developer community and rapid institutional adoption, the stage appears set for Coinbase return to make a significant impact. Will Coinbase India reentry reshape the country's crypto ecosystem and set new regulatory standards? Gould's crypto background sparks optimism for fintech-friendly policies at the OCC. In a major move for the financial and crypto sectors, U.S. President Donald Trump has nominated Jonathan Gould, a seasoned legal expert and former Bitfury executive, to head the Office of the Comptroller of the Currency, OCC, the primary regulator of national banks in the United States. The White House submitted Gould's nomination to the Senate on February 11, aiming to appoint him as the Comptroller of the Currency for a 5-year term, pending confirmation. Who is Jonathan Gould? A veteran in finance, regulation, and crypto. Jonathan Gould brings extensive experience from both the traditional banking sector and the crypto industry. He previously served as the OCC's Senior Deputy Controller and Chief Counsel from 2018 to 2021 under Trump's first administration. Additionally, Gould held a senior role at BlackRock from 2014 to 2018 and later became the Chief Legal Officer at Bitfury, a leading blockchain infrastructure firm. Currently a partner at the law firm Jones Day, Gould's nomination is seen as a signal that the Trump administration aims to balance innovation with regulation in the financial services industry. OCC's role and why Gould's appointment matters. The Office of the Comptroller of the Currency, OCC, plays a pivotal role in overseeing national banks, including J.P. Morgan Chase and Bank of America, ensuring the safety and stability of the U.S. banking system. With Gould at the helm, industry leaders anticipate a more pro-crypto regulatory environment that could bridge the gap between traditional finance, TradFi, and the digital asset economy. Crypto leaders applaud Gould's pro-Web3 stance. Gould's nomination has been met with enthusiasm from prominent figures in the crypto and fintech communities. Kristen Smith, CEO of the Blockchain Association, called Gould an excellent choice for controller, emphasizing that his experience in blockchain infrastructure will help him guide the OCC effectively. Avichal Garg, co-founder of Electric Capital, praised Gould's commitment to fair banking access for crypto firms, highlighting his opposition to Operation Chokepoint 2.0, a policy allegedly aimed at restricting banking services for the crypto industry under the Biden administration. Gould's position on crypto regulation, a balanced approach. In his March 2023 testimony before the House Financial Services Digital Assets Subcommittee, Gould expressed concerns over the chilling effect of excessive regulations on banks participating in digital asset services, stating, "Current regulatory actions risk limiting banks' willingness to engage with digital asset entities, hindering innovation in the financial services ecosystem." His stance aligns with the broader Trump administration's pro-crypto policies, suggesting that Gould will likely push for a regulatory framework that supports innovation while maintaining compliance safeguards. Trump's crypto-focused regulatory picks continue. Gould's nomination is part of a broader pattern by Donald Trump, who has increasingly chosen crypto-savvy leaders for key financial regulatory roles. Brian Quintenz, a known crypto advocate and policy head at A16Z, Andreessen Horowitz, has been nominated to lead the Commodity Futures Trading Commission, CFTC. The industry expects him to promote policies positioning the CFTC as the primary crypto regulator, challenging the Securities and Exchange Commission, SEC. John Hurley has been nominated as Treasury Undersecretary for Terrorism and Financial Crimes, overseeing anti-money laundering, AML, initiatives. According to Electric Capital's Avichal Garg, Hurley, a Bitcoin investor, is likely to enforce strict compliance standards but may take a measured approach toward stablecoins and crypto oversight. Will Gould oversee a major regulatory shakeup? Gould's nomination comes amid reports that Trump administration officials are exploring a potential merger of the Federal Deposit Insurance Corporation, FDIC, with the OCC or folding the FDIC into the U.S. Treasury Department. If such a reorganization proceeds, it could consolidate federal banking oversight, giving Gould greater regulatory authority over the U.S. banking system, a development closely watched by both crypto firms and traditional financial institutions. A pivotal moment for U.S. crypto policy. With the U.S. crypto industry facing increasing regulatory scrutiny, the nomination of Jonathan Gould signals a potential shift toward more constructive engagement between regulators and digital asset firms. Industry leaders believe that Gould's crypto background positions him uniquely to promote responsible innovation, facilitate fair banking access for crypto companies, provide regulatory clarity that supports blockchain growth. Will Jonathan Gould's leadership usher in a new era of crypto-friendly banking regulations under the Trump administration? Bitcoin price could surge to $1.5 million by 2030, ARK Invest's Cathie Wood predicts, thanks to institutional demand. Bitcoin, BTC, the world's leading cryptocurrency, could hit a staggering $1.5 million by 2030, according to Cathie Wood, CEO of ARK Invest. Wood believes that increasing institutional adoption and a growing demand for Bitcoin as an asset class will drive this remarkable price surge in the coming decade. ARK Invest's Cathie Wood, a longtime advocate for Bitcoin, sees an optimistic future for the digital currency. Speaking in a recent interview, Wood stated that Bitcoin's chances of reaching the $1.5 million mark by 2030 are higher than ever, largely due to the rising interest from institutional investors. She emphasized that more financial institutions are now viewing Bitcoin as an essential part of their portfolios due to its unique return and risk profile compared to traditional assets. Since February 4, Bitcoin has struggled to break through the crucial $100,000 price barrier. The temporary dip in Bitcoin's price has been attributed to broader economic concerns, including global trade tensions and newly introduced tariffs between the US and China. Despite these short-term challenges, Wood remains highly optimistic about Bitcoin's long-term prospects, with predictions pointing towards a massive upward trajectory. Wood remarked, "Many people recognize us for our bullish Bitcoin forecast, $1.5 million, adding that the likelihood of reaching this target has only increased." According to her, the growing institutionalization of digital assets plays a significant role in this bullish outlook. As more traditional financial institutions add Bitcoin to their portfolios, the cryptocurrency's potential for a substantial price increase becomes more probable. With Bitcoin's fundamental case supported by increasing institutional adoption, ARK Invest's prediction for Bitcoin to achieve a price of $1.5 million in the next decade aligns with the broader trend of growing confidence in cryptocurrency as an asset class. Many large institutional investors are now shifting their focus towards Bitcoin, recognizing its potential as a hedge against inflation and a store of value, much like gold. Institutional confidence boosting Bitcoin's market potential. The entry of institutional investors is becoming a key factor in driving Bitcoin's market value higher. Wood suggests that large capital holders, such as pension funds and family offices, are beginning to see Bitcoin as an essential part of their investment strategy. This trend towards institutional involvement is expected to fuel Bitcoin's growth in both value and mainstream acceptance. Bitcoin's increasing appeal to institutional investors may result in more widespread adoption of Bitcoin exchange-traded funds, ETFs. Institutional investors have the power to move markets with their large capital investments, which could significantly affect Bitcoin's price trajectory. As ARK Invest continues to monitor the market, Wood's analysis shows that Bitcoin is still on track for the projected $1.5 million price target by 2030. Bitcoin's path to $1.5 million, ARK Invest's long-term view. In ARK Invest's annual report, Big Ideas 2025, the firm outlines Bitcoin's potential growth trajectory. According to the report, Bitcoin is expected to experience a compound annual growth rate, CAGR, of 58% over the next 5 years, setting it on track to reach $1.5 million by 2030. This growth rate would assume that Bitcoin continues to gain traction among both institutional and retail investors alike. However, ARK Invest also provides a more conservative base case scenario. Under this scenario, Bitcoin would experience a 40% CAGR, bringing the price to $710,000 per BTC by 2030. In the most pessimistic, bear case, Bitcoin could grow at a slower pace, resulting in a price of $300,000 per coin by 2030. Despite these forecasts, Bitcoin faces short-term challenges. According to Ilya Kalchev, a dispatch analyst at Nexo, Bitcoin's price will likely remain capped in the near term, especially until it breaks decisively above the $100,000 mark. Kalchev noted, if Bitcoin fails to breach the $100,000 threshold, we could see short-term selling pressure pushing prices back to $95,000. On the other hand, if it breaks through, we could see the price climb towards the next resistance level at approximately $106,500. Supply shock could propel Bitcoin to new heights. Bitcoin's price rally could also be driven by a supply shock, a scenario in which the demand for Bitcoin outpaces its availability on cryptocurrency exchanges. According to experts, only around 2.5 million BTC remain available for trading on exchanges, and as Bitcoin's demand rises, this limited supply could lead to further price appreciation. A supply shock occurs when demand outstrips supply, forcing prices higher as fewer coins are available for purchase. Bitcoin's fixed supply of 21 million coins means that once all coins are mined, no new coins will enter circulation. This scarcity, combined with increasing institutional demand, could create the perfect storm for Bitcoin's price to surge well beyond its current levels. With the growing institutional interest and the potential for a supply shock, Bitcoin's future looks increasingly bright. If ARK Invest's predictions hold true, Bitcoin's price could reach unprecedented levels by 2030. Could institutional demand and a potential supply shock help Bitcoin reach $1.5 million by 2030, or will market fluctuations slow its progress?